Okay, I record this video on Sunday, the 28th of May, 2017. Do hope you're doing well on this long weekend. So, this is a video I've been meaning to do for an awfully long time. I want to talk about the two major cryptocurrencies, Bitcoin and Ethereum. And this weekend seems like a good time to talk about Bitcoin because we've had a massive run-up in Bitcoin in the last week. It's up 50% in 1 week alone. And we've also had a massive correction in the last 2 days. We're down off those highs, corrected all of the move that we had in the last week, and so we're down 30% off those highs in Bitcoin at the moment. Bitcoin's still up massively on a year ago. We're up 4 times where we were 1 year ago, but at that peak a couple of days ago, we were up 5 times where we were a year ago. Before getting into this, though, a couple of caveats. First of all, I'm no cryptocurrency expert. This is an incredibly technical field. But luckily, you got the internet out there, and this is a geek topic, and the internet just loves Bitcoin. So if there's anything you need to kind of clarify, check, research, whatever, just head to the forums and head to the Wikipedias and whatever, because there's so much on this stuff online. Hopefully I'll get kind of the major kind of concepts and terminology right, but if I don't, forgive me. Second thing to say is I am not trying to convert you. There are plenty of people out there think that this stuff is total BS. And frankly, if you think it's BS, I am not going to be able to kind of shift you on it. So better switch off now, I'd suggest. And if you think it's BS and you think what I'm saying is BS, don't send me an email, please. We've both got our points of view and we should probably stick in our respective corners. And lastly to say, this is definitely not financial advice because this thing is so volatile, it's unbelievable. Use your common sense, and if it's something you're interested in, just tread carefully. All right, big picture. Let's step back. I stepped into this thing a year ago. I was probably late to the game, but it was a year ago, and I didn't go in kind of in little steps. I jumped in big time. So I've got quite a lot kind of riding on this. Here's what my thinking was when I kind of got into it last year. I'm always thinking about what is the next big real estate or property bubble or whatever, some kind of systemic change. And I think of it like this. Could you put yourselves in someone's shoes in 1980 and say, you know what I'm going to do? I'm going to get into real estate big time. I'm going to buy real estate. I'm going to develop real estate. I'm going to renovate real estate. I'm going to have myself a big real estate portfolio. This is where the game is going to be. The big money is going to be made over the next 30, 40 years. Because at that time in 1980, we were sitting with high unemployment, high inflation, high interest rates, sluggish economy. We had union problems. We had new kind of political leaders in Reagan and Thatcher coming in the US and the UK. But could you have sat there in 1980 and said, you know what, this is going to change and the fundamentals, we're going to have a systemic shift that's going to mean that real estate and property investing is going to be the biggest game over the next 30, 40 years, that interest rates are going to go from high teens and 20s down to 1 and 2% from the average investor, that you're going to get loan-to-value ratios moving from putting 40, 50, 60% money down to putting almost 0% money down. Property across the board in all the major cities were going to go up massively, even though the cities were already overcrowded, that people would continue to move into kind of the major cities and property prices would continue to go up and up and up. In that whole property real estate game, we've had a systemic shift in all of these things, in interest rates and loan-to-value ratios, and it's culminated in everybody has who's been lucky enough to buy into real estate in the last 20, 30 years, their assets are massively overweight in real estate. And real estate is everywhere. It's on TV shows, it's in renovations, picking properties, here, at home, abroad, vacation, beach, you name it. It's on everybody's kind of lips. And it's a systemic thing that's happened. So I'm sitting today thinking, what is that same thing that has some of those characteristics where there's going to be a systemic shift happening, where things fundamentally change? I think 10, 20 years ago, it was the internet definitely kind of came along. And that was another kind of major kind of game changer. Question is, because we went through the dot-com boom and bust, how you could have ridden that best, just holding NASDAQ, all the way from inception or whatever it might have been. But what was the way to play the internet boom? And so I'm thinking currently over the last several years, like, what is that same thing that's going to be, just massive over the next 20, 30 years, that looking back, we'd be able to say, yep, around 2010, 2015, you could have looked at that and said, yeah, that was the way the world was going to play out. That was kind of obvious in hindsight. And I don't know, there's been a few things kind of on my mind over the last few years, one of which is, the next phase of technology, which is, the combination of internet plus artificial intelligence and robotics, leading to, game changing in that way. I think autonomous vehicles is part of that whole kind of mix, and how that thing is going to develop over the next 30, 40 years. That's clearly one of those game changers. Question is how to play it. The other one that's kind of clear that's going to happen is this mix of demographics between the emerging markets and the mature markets. In the mature markets, particularly in Europe, we have a demographic cliff happening. It's happening, playing out real time in Japan right now, where we have a massively aging population and very few young people, and how that absolutely changes the economics, particularly government economics, which are built off tax revenues from young people paying for old people retiring and healthcare and so on. And then you marry that with the population explosion that we can see going to happen in Africa, and then growing population on the planet and resources being scarce, particularly things as basic as water. And again, how do you play that? And then the third one, which I think is kind of a big one, is the collapse of socialism, the death of socialism. I like going back to Margaret Thatcher's quote, which is, socialism is all well and good until you run out of other people's money. And we're getting to that point where, it used to drive me crazy 5-10 years ago that, the governments were not paying off their debts. And now I realize, 5-10 years later, they're not ever going to pay off their debts, because we've had central banks intervene with quantitative easing. And again, quantitative easing just rolls off the tongue so easily. If you'll recall, back in the mid-90s, when Japan was considering quantitative easing, economists, people in the know, considered quantitative easing the nuclear option. It was like pressing the red button. And now we press this red damn button so many times, it's like, a candy machine. So we've got central banks massively intervening with their quantitative easing and all the other things that they have done with buying up all of the bonds and so on. In the corner, we have this thing called Bitcoin, which has been invented in the last 5 years, which works and is an alternative to currencies. So the combination of that death of socialism, central bank craziness, and an alternate currency that has a number of advantages over and above, things like gold, is kind of a really interesting combination for me. I'm pretty keen on that third one. I think that one is going to be a game changer. Plus, it's far more obvious in that third option what the play is, which is buy Bitcoin, buy some of these what are called altcoins, and kind of ride them and see where they go. You can also invest in the technology, and you become a provider or a shareholder or an inventor or whatever it might be. But the obvious play in Bitcoin is just to buy or mine the Bitcoin. And we've already had some Bitcoin use cases that have played out really successfully where traditional money has failed. And there are 3 examples. Everybody kind of gets this wrong about Bitcoin. People think that Bitcoin, it's just, another form of currency. It's like electronic money, but with some bells and whistles on the side. But that's the long term, where we're possibly using currencies like Bitcoin to transact. In the meantime, what is happening is it's being used as a store of wealth. And that is what is far more significant currently in terms of the role that Bitcoin is playing. And so these use cases have been using Bitcoin as a store of wealth, as an asset. First ones are currency collapses, which poor South Americans seem to do on a regular basis, but we've had Argentina and Venezuela, and during both of those currency collapses, a lot of people have turned to Bitcoin to get money into the country, get money out of the country, transact, and so on. The second example is banking system collapses, and we've had those in Greece and in Cyprus and in Iceland in the last 10 years. And in those cases, Bitcoin has been really helpful in getting your money out of those countries, getting it into an asset that's appreciating or at least safe and so on. Iceland not been used so much to get kind of currency out of the country because they banned it as a form of money, if you like, in Iceland. But Iceland has actually become a hub for mining of Bitcoin, and so they're open to using Bitcoin in other ways. But it's a banking system collapse that could have used Bitcoin to protect people in those countries. And then lastly, getting around capital controls. So over the years, we've had various capital controls where you can't move your money over borders in and out of countries. And in those cases, Bitcoin has been very useful in moving money in and out anonymously. So we've got examples in Iran and Cuba, Russia and China. Of those, the Chinese one is the biggest one. There's been a huge amount of money that has come out of China using Bitcoin. And as a result, the People's Bank of China, their central bank, has kind of come in and regulated Bitcoin pretty heavily in China itself. But all that's meant is that the exchanges and the people who are opening kind of accounts in Bitcoin have just moved offshore. And at the moment, they moved back into Japan. Those are the exchanges that are kind of growing rapidly. The big picture is that Bitcoin is already being used successfully as an alternate form of money where we have these collapsing socialist systems. So let's just talk about the two major cryptocurrencies out there, Bitcoin and Ethereum. The other cryptocurrencies, and there's a whole heap of them that have been kind of written and launched over the last several years, are called as a group altcoins, alternative coins. One that's quite interesting that's coming up pretty fast is called Ripple, and that's used by banks for overseas international kind of transfers. But not going to talk about Ripple, just going to talk about the two major ones, Bitcoin and Ethereum, because they're both interesting and they're the leading players. If you're going to get into this, or if you are into this, these are the two things that I think you should be considering. The first thing, just to note, I've got a little definition or a helpful kind of text, a blockchain. The blockchain, everybody's kind of heard of the blockchain, but in essence, all it is a public record of transactions that is tamper-proof. So it's been encrypted, everybody can see it, it's anonymous to some extent, but it's a public record of all transactions. Bitcoin started in January 2009. I think that was when the first kind of transaction kind of went along. So what are we talking about? 8 years, kind of 7 or 8 years kind of going. Ethereum, that was only launched in August 2015. But they both fundamentally use the same kind of blockchain technology, the same idea. The coding of their blockchains are very different between the two, but they're both using this kind of public record of encrypted, tamper-proof record of transactions. Bitcoin has two roles. The first one is an asset, so it's digital gold. It's a store of wealth. And then secondly, it's a transaction currency, a digital currency. It has those two things. I can keep my money in Bitcoin and to retain its value, and then I can spend it on transactions. Ethereum is very different. Ethereum is a smart contract, and it has a digital currency attached to it. The digital currency is called Ether. The smart contract is something that allows you to be paid when some service is rendered, for example. So let's say you're renting an Airbnb. You've paid your money with an Ethereum kind of contract, and on the other side, someone says, right, I've received your money, I'm going to give you access to my Airbnb. So you show up to the Airbnb with a QR code on your mobile phone, and it allows you into the Airbnb for the 3 days that you've paid for. That whole transaction could take place in an Ethereum smart contract, the whole thing. The payment then would automatically allow the QR code to be available on the dates that you've rented that Airbnb for. Another example might be something like we've got a problem at the moment with images being stolen online and used online, and people want to either receive payment for their images being used online. Let's say you're a photographer, taken a nice image and someone's used it on a website. Well, by embedding that image that sits inside a smart contract, you could be making a license payment to use that contract in Ether back to the owner of the copyright, for example. That whole thing could be wrapped in a smart contract, and so the transaction takes place and automatically those other parts of the contract, the service, are kind of embedded in that digital technology. So very different from Bitcoin. It's far more kind of complex and almost unlimited in its uses, but smart contracts is the term that you'll hear. On the Bitcoin side of things, this thing really is designed for consumer use. On the Ethereum side, it's all about business use. People are going to be building Ethereum contracts, these smart contracts. They're going to be businesses that actually kind of build that. Bitcoin is limited in its supply, and it's being mined over the years. And in totality, there will only be 21 million Bitcoins ever issued, mined. It's possible that might change, but that would be a radical change to Bitcoin that everybody would have to agree to. But at the moment, you'd say the supply is limited. The supply of Ethereum is technically unlimited, increasing at a decreasing rate. Bitcoin currently takes about 10 minutes to clear a transaction just because of the technology that's kind of embedded in the Bitcoin blockchain. Ethereum is a lot faster, 20 seconds to clear an Ethereum contract. And then lastly to say, Bitcoin really is quite simple, designed for this kind of single use. Ethereum, though, is far more complex and potentially has unlimited uses. So very different things, kind of Bitcoin and Ethereum. And the pricing of Bitcoin and Ethereum has two things kind of going on. The first one is just general demand increasing month after month as these things become more popular, higher adoption rates and so on. So that general demand is going up just month after month after month. However, in amongst that, there is an awful lot of noise and news noise that kind of goes on that has caused particularly some pretty kind of sharp downward moves in each of those currencies, cryptocurrencies. In terms of the Bitcoin, the history of Bitcoin, when it first started, when they were using it on the Silk Road, which was a black market, online black market, where you could buy drugs and assassins. When the Silk Road kind of got shut down and it was found out that they were using Bitcoin there, that Bitcoin took a big hit from the reputation of being associated with Silk Road. The other big one was Mt. Gox, which was at the time the largest Bitcoin exchange, operated out of Japan. When that was hacked and people lost a lot of money, again, reputational risk, and Bitcoin took a big hit. More recently, the Winklevoss twins, them of Facebook fame, were trying to get an ETF, a Bitcoin ETF, launched, and that was refused by the SEC, although there are a couple of people kind of coming back with that. That might change in the next year or so. China, as I was saying, China has been very exercised about this whole business of capital flight out of China using Bitcoin. And so they've done a number of things over the years to kind of try and slow the use of Bitcoin. The last thing that they did was effectively they shut down the Bitcoin exchanges in China, or made them almost unworkable. On the plus side, though, in the last couple of weeks, Japan has come out and recognized Bitcoin as money. So that's quite unusual and goes against kind of the international flavor of the way Bitcoin is used as a barter mechanism instead of money itself. And coming up, we're going to have what's called a hard fork in Bitcoin because there is a technical limitation to the size of the blockchain and the amount of time it takes to process transactions that needs to be addressed by the Bitcoin consortium. And so we're going to have what's called a hard fork, where the code fundamentally changes and we move to a new version of Bitcoin. That will happen sometime soonish, I think, and I think that will be a good thing. That's one of the reasons why we had such a big run-up in Bitcoin in the last week or two, was because it's becoming clearer that that hard fork is going to actually happen and people are agreeing to it, which is a good thing. Noise on the Ethereum side of things, again, Ethereum's been around a lot shorter time than Bitcoin, so less kind of things have come in to affect it news-wise. But the first negative thing that came along, there was a crowd-funded VC fund called the DAO, and that was hacked and they lost a lot of money on that. That showed a fundamental flaw in the Ethereum code, and so that caused them to write a hard fork in the Ethereum code and caused two versions of Ethereum to be kind of launched. The new Ethereum kind of went on, and the old Ethereum using the old code became Ethereum Classic, and that's kind of going out of fashion. But that hard fork was actually a success and caused Ethereum price to kind of gain from there. And the last kind of big thing that happened to Ethereum was a couple of months ago. We had a huge consortium. This thing's been going for a while. It's called the Enterprise Ethereum Alliance, and there's been some extremely big names, Fortune 500 names associated with this, and it seems like every couple of months they just tack on more and more large big names, brand names to that consortium, and it just gains in credibility as they do that. But a few months ago they had a major announcement on a number of people joining that consortium, and it caused a real kind of bump in the Ethereum price. So you got this underlying demand going up for the cryptocurrencies over time because their adoption rates keep on going up and up. But you have these kind of elements of noise with news releases that kind of come up that positively and negatively affect what's going on the pricing. And so that's where we see this really large volatility going on. In terms of why I jumped in last year, I was probably a year too late, because I think these things were clearer back in, had become clear in 2015. But certainly the regulatory position was done and dusted by 2016. Pretty much all the major economies have come out. Their regulatory bodies, their central banks, whatever, have come out and said this is how we are going to treat Bitcoin from a tax perspective, from a capital gains perspective. Is it money? Is it barter? Whatever. So all of those things have been set in stone. And several years prior, that was actually very unclear. There were a lot of kind of discussion documents that needed to be done, and a lot of people around the world had to see. A lot of countries were watching what other countries would do. So as soon as that kind of regulatory position became clear, you could get in with a little bit more certainty as what was going on. The Silk Road scandal had passed, and so this whole view that Bitcoin is just used by drug dealers and gangsters, has kind of gone. And particularly with the blockchain becoming mainstream. So all of a sudden, blockchain is no longer a dirty word. And then lastly, we seem to have crossed the balance point for mining supply and increasing demand. We were mining Bitcoin at a very fast rate in the early years, and that's become harder and harder as the difficulty of the algorithm kind of increases. And by mid-2016, we'd mined 16 million of the 21 million that were total available of Bitcoin. And so in my mind, the supply was slowing down. The growth of supply was slowing. However, the demand for Bitcoin was still ramping up. And so in my mind, we'd reached this kind of balance point where they'd kind of crossed over. And so all of those things made me think, yep, I think Bitcoin, this is the right time to kind of jump into Bitcoin kind of last year. But as I said, I'm way late for the game. What I've done, not going to go into the details of this, but just to say I'm both in Bitcoin and Ethereum, probably about 60-40 Bitcoin versus Ethereum at the moment. I think there's advantages to holding both. It's kind of a hedge between the two, but they both are very different in terms of what they represent and what they're trying to do, and I think they both have a huge amount of upside. So I'm into both of those. Ripple, I don't know very much about. I mentioned that earlier on. It's kind of the biggest of the altcoins, the alternative coins, and it's kind of coming along with the banking system, using it for international transactions. So that would be another one I might kind of just try and understand a little bit more about. Now, having said all those kind of positive things, there are some day-to-day things that make this thing really kind of tricky to deal with. The first one is do not get hacked. It's like it is so easy to, we have all these horror stories about Bitcoin accounts being hacked over the years. It's kind of crazy. There are ways to hold Bitcoin without using an online wallet and so on, so you can get things kind of away from the internet and as unhackable as possible. But if you're going to hold your Bitcoin, hold it in an online wallet that has two-factor authorization. So that's using mobile phone codes sent to you as well as passwords being sent to you. That's a basic. The second thing to say is it costs you nothing to open different Bitcoin or various cryptocurrency accounts in different legal jurisdictions. It costs you nothing to open those accounts, and it costs you nothing to transfer the Bitcoins or the Ethereums between those different wallets. So I would have multiple wallets in multiple jurisdictions holding your Bitcoin and Ethereum to kind of spread the risk. Now, I haven't particularly figured out how to cash out of this in a smart way. Yeah, it's easy enough to sell your Bitcoin and just be done and out, or sell your Ethereum, be done and out, transfer the money back into your account. However, in most countries, as soon as you move it back into dollars, into the currency of your home country, you crystallize a, hopefully, capital gain, which you're going to pay capital gains tax on. Don't want to do that. Certainly don't want to do that yet, because I have this super long-term view on this whole prospect. So that's kind of, for me, is kind of an unknown and uncertainty, and doing that in a smart way is something I need to kind of figure out. Some practicalities. There's no centralized exchanges for Bitcoin. There are multiple exchanges, Bitcoin, Ethereum, and all these other altcoins kind of around the place, but none of that data has been aggregated successfully anywhere. And there is very little volume data, which, as you guys would know, is kind of a critical to be able to time the market. So not having those things is really a pain. However, one place I would point you to is Bitcoin Wisdom. I actually think their charting is pretty good on this. And I'm just bringing up, this is a chart. This is their site. you can go to track each of the cryptocurrencies. Here's Bitcoin, Litecoin, altcoins, and so on, kind of down here on the different exchanges. Here's in the USD, Bitfinex is the biggest exchange on Bitcoin, and here's their chart. And you can see this is a 6-hour chart of what's kind of gone on. So we ran up in Bitcoin up to almost $2,700, and then we dropped down to almost $1,800 on the lows, kind of down here. I like their charting platform; it's pretty good. But the reason I'm using this is the volume data that we got here. So at least with some of this, you can get some sense of the volumes that are going on and understand kind of capitulation volume and blow-off volume. And the reason why I wasn't getting out at 2,600 was because we did not have a real explosion in volume on the upside, certainly on this exchange. I wasn't looking at all the exchanges, but this was the biggest one, so I was checking that. And because we did not have that, and for this to turn around and go the other way and to have its kind of blow-off move, that's what we need. We need the general public to get on board this thing and blow the socks off it in terms of their interest and the volumes that are going through, and have one of those .com kind of NASDAQ booms that we're looking for. That's what I'm looking for, as somewhere that you start taking profits or getting your Bitcoin out and buying real assets. So because we didn't have that blow-off volume kind of going on there, that's why I wasn't kind of thinking of even kind of trading out of this position. But anyway, so we found a little bit of support down here at the 1800s. We're bouncing back above 2000 at the moment, so that's something. So go to this, Bitcoin Wisdom. That's where you can kind of track prices pretty good. The other thing to say is the New York Stock Exchange has tried with an end-of-day Bitcoin index, but that's just tracking closing prices. So they've done their best, and we've got some decent history there. The CME, Chicago Mercantile Exchange, is also trying to get into this. They said they'd launched this Bitcoin index months ago, but really the data is only just starting to come through. Those are the two symbols that you can use in TradeStation to call up that data. So let me just show you that quickly. So this is, first of all, this is BRTI, dollar BRTI. This is the real-time pricing. 60 minutes gives you this 60-minute chart, but obviously it gives you kind of high-low close information, which is kind of good, but no volume information, none at all. And in terms of history, that's as much as you get. Each of these is a day with overnight sessions with between the narrow yellow lines. So I think that'll be handy kind of going forward for at least tracking prices in some fashion. But without the volume data, it's not kind of trading data as far as I'm concerned. The other one is this New York Stock Exchange Bitcoin Index, dollar NYXBT. And this, I've just put on this momentum, you can see. So that was Thursday's activity here, where we saw Bitcoin gain $400 in a day. And then the next day, on the Friday, we went down 309, and it kept on going kind of overnight. So that's kind of interesting. Let me just turn that off. But this is where I'm tracking the prices back. You've got a fair amount of history back here, back to 2016, which is kind of 2015, which is good. And I've just put on the multiple time frame better indicators system view. So this shows that we're in an uptrend. We've broken above these long-term cyclical resistances. The highest time frame one is sitting down here at 460. The intermediate one is sitting here at 640. The last one we had on the lowest time frame was 1215, and we've got confirmed uptrend with breaks above these. So I'd be using this to some extent more to time my entries rather than my exits on this. But as soon as we start looking at pullback to end of trends on the intermediate time frame, wherever that kind of plots over the next several months kind of going forward, that for me will be an interesting kind of price point to see if there's an opportunity there to think about doing something. But must admit, over this weekend, with that activity that we're seeing, with it starting to find some support and catching, over the next week I'm going to look and see if we have a low volume test kind of into that 1800 level, and see if that's a good place to kind of jump in and buy a little bit more. So there we go, just some thoughts on Bitcoin. For me, it's a long-term thing, so you might see some more videos on this in the coming months. Anyway, enjoy your weekend, and looking forward to Tuesday's trade.